Hi folks, I'm Bob Benny,
I'm Jesse Thompson.
and we're both certified financial planner professionals with Bob Benny Wealth Management right here in Lincoln, Nebraska. And welcome to this week's Bobcast.
This week's Bobcast is called War's Impact on Markets. So over the weekend, the United States and Israel attacked Iran. It's been a lot on the news lately. There's been, if you look at any stock market web pages or follow anything like that, you'll see a bunch of articles that say markets roiled by Iran attacks or something like that, when really the market has done hardly anything. On Monday, the market dropped a little bit in the morning and had returned and was in the positive and the green by the afternoon. We just kind of wanted to give a reminder on how the stock market typically reacts to geopolitical events and war, because it sounds very scary. War is not. War is terrible.
War is scary.
War is scary. And you'll see a lot of things in the news and in the stock market news about what it might mean, and people being afraid that the stock market is going to drop because of war. Every time anything happens, that's how it is. And every time, if I showed you a chart of what the stock market does whenever there's a geopolitical event, the same exact thing happened when Russia attacked Ukraine a couple of years ago. If I went back and showed you every single one, the stock market has an initial drop due to the uncertainty and fearful people that get out of the market.
Right.
And then it comes back up once people realize that it's not going to be the end of the world.
Right. And the biggest mistake one of the two biggest mistakes that people make with investments is making investments based on emotions of fear or greed, in this case, fear. Well, the media loves things like war because they can it's easy to feed the fear and keep people's attention, keep your eyes on the screen, on your phone or on the television, or listening to the radio and looking for the next development and how many people, blah, 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 and just scare. Well, the worst thing you can do is make an investment decision based on fear. You don't want to sell when you're fearful because whatever reason the media is stoking or your heart is telling you to be fearful. So we just want you not to be fearful about the war, particularly about your money. Mm-hmm.
And for perspective, from a historical returns perspective, the stock market, like we said, initially usually takes a very temporary dip. It can be days, it can be weeks, might be a month or two sometimes, but by 6 months, historically, the returns in a year where there's been a geopolitical event or a war breaks out are the same on average as an average year that doesn't happen.
Right.
By 6 months. So it's very short-lived if it happens at all.
So this is kind of so keep your powder dry.
I'm not sure what that means.
Sorry. We just recommend everybody stay the course. Don't worry about your money. Don't worry about anything, but certainly don't worry about your money. For those of you that are our customers, we're on this all the time and keeping an eye out for if any changes need to be made. Certainly you can call us or email us if you have any questions or concerns that you want to talk to us about. But is that about it, Jess?
That's about it. Hope you guys have a wonderful week. Remember to like and subscribe so other people can see the free content that we put out.
Right.
And you can see when new ones come out too. Thank you.
Thank you. Have a blessed day.